In November 2025, Disney Plus hiked the annual subscription from $79 to $159. Users were outraged. Disney subscribers have also been declining for years. Their stock price has gone sideways after a decade, but it gets even stranger. After one of their most successful series in history, Andor, Disney executives said streaming is dead. Is the giant streaming experience a failure? Is Disney Plus finally dying? Or is something else entirely different taking place here? We first have to look at what Disney Plus was supposed to be. With the rise of Netflix, the writing was on the wall. Cable was dying and streaming was here, and for companies like Disney, they had a huge opportunity. Pixar, Marvel, and Star Wars films share that same powerful characteristic, and they're all going to populate Disney Plus. We're starting from a position of strength, confidence, and unbridled optimism. And he was right. Disney had been slowly tightening its grip on the industry. They had slowly begun buying up all kinds of brands. Pixar in 2006, Marvel Entertainment in 2009, Lucasfilm aka Star Wars in 2012, yet their next move was their biggest. 21st Century Fox. Disney already had a lot of brands, but this was different. It would make them the king of entertainment. It was a gigantic collection of films, TV shows, and IPs. The Simpsons, Alien, X-Men, National Geographic, X-Files, Avatar, Planet of the Apes, the list goes on and on and on. Yet, it also came with something much more important. After a bidding war with Comcast, Disney acquired Fox for $71.3 billion in mid-2018, and that brings us to Disney Plus. With Fox secured, the backlog lineup was colossal, and they were planning on creating new content like Star Wars and Marvel streaming shows. If Netflix can build an empire without any beloved IP, just think of what Disney could do. Disney Plus would be launched on November 12, 2019, and even before it launched, it was shaking the industry. Netflix reported it had lost subscribers and the stock dropped 14%. Meanwhile, Disney jumped 28%. With a slate of new and classic TV shows and movies, Disney Plus is viewed as the most dangerous threat to Netflix, and it only got worse. In September, Netflix added 500,000 subscribers that quarter, while it had projected 800,000. International subscribers were also down. What makes this even stranger is that a new season of Stranger Things dropped at this time. It seemed like everyone was waiting for Disney to arrive. We see a make-or-break quarter for Netflix. Apple was also launching its own streaming service at the same time, but Netflix remained steady. While the new competitors have some great titles, none have the variety, diversity, and quality of new original programming that we are producing around the world. To make matters worse, Netflix had just raised its prices, while Disney Plus was launching at just $6.99 a month. They even had a $12.99 bundle with ESPN Plus and Hulu, which was the same price as Netflix. But remember that Fox acquisition? It also gave Disney Hotstar, a network with hundreds of millions of viewers across Asia and in particular India. It came with massive networks in TV and sports streaming rights like cricket with the Indian Premier League as well as other sports. It seemed there was a lot more value with the Disney Plus. And then it finally launched. On just the first day, it gained 10 million signups. 5 months later, it passed 50 million. Then a full year after launch, it had over 73 million subscribers. For context, their projections were to reach this number by 2024, and it was still only 2020. Everything was going great. Original TV shows like The Mandalorian had millions watching and high review scores. By the end of season 1, it had surpassed 5.42 billion minutes of viewing time. It seemed like Disney was taking over. But then, something changed. The next couple of years didn't quite go as hoped. That hype began to wane. Whether we like it or not, there's a growing need for people who can use AI properly, especially in tech jobs today. Generative AI is revolutionizing industries and is also becoming more complex every month. In the world of tech, you need to move fast and stay on top of this game-changing technology, and there's no better way to do so than with Coursera. Coursera is a prestigious learning platform offering courses and degrees from real companies and universities. And they've added a wide selection of courses focused on AI. Learn from prestigious lecturers and major tech companies, like the course on Prompting Essentials from Google, a certificate on generative AI engineering from IBM, or a course on AI ethics and responsible use from the University of Michigan. Courses come with lectures, readings, quizzes, and assignments which are graded by real people. These courses come with real career certificates taught by people actually in the tech world. Be in the know on the current AI discussions like DeepSeek versus ChatGPT or AI job demand, and this is more important now than ever. The job market today is tough. Even if you have a job, one of the best ways to stand apart is to upskill and get extra certification. Coursera is the perfect way to become an expert on the field the entire industry is heading and position yourself for a better career and higher income. Join hundreds of thousands of others using Coursera to upskill and stand apart. Start learning AI today and enroll now on Coursera. Click the link in the description to get 40% off 3 months of Coursera Plus. Thank you to Coursera for supporting our videos. In 2020, when Disney passed 70 million subscribers, Netflix was sitting at 195 million. In 2022, it had passed 160 million, but Netflix was still ahead at 230 million. Of course, they had the first mover advantage, but that wore off a while ago. Why is Netflix so far ahead? It had no IPs, no brands, nothing. But it gets even stranger. After the initial hype, Disney quickly began to plateau, while Netflix kept growing. While Disney was confident in their lineup, many people don't just sign up for a backlog of content. They sign up to watch something new that everyone else is talking about, which is what Netflix does. Netflix was playing an entirely different game. House of Cards, despite being a political thriller, cost about $4.5 million per episode. Stranger Things, when it began, cost $6 million an episode, eventually rising to about $30 million. These original TV shows often cost over $100 million each, but Netflix is happy to invest that money. In fact, this investment has accelerated. In 2016, they spent $6.8 billion on their original content. In 2020, that had risen to $11.8 billion. Netflix has been betting big on originals, and when we look at their lineup of content, it starts to make sense. In March of 2022, original content made up 35.9% of Netflix's total content. But by July 2023, originals had jumped to 55% of their library. And when we look at the data, it all begins to make sense. 36% of subscribers, or 32 million households in the US, are service hoppers, aka subscribers who switched between services and resubscribed to services multiple times in the previous 12 months, signing up for the newest, hottest show or movie, then leaving. This means the churn rate of subscribers from platform to platform is extremely high. Disney and others tried to do the same, but just couldn't keep up. After The Mandalorian, Disney struggled to replicate that magic. The cost of Star Wars The Acolyte was $230 million for one season, but it couldn't keep subscribers watching. The same went for many of Disney's originals. They just couldn't keep up with Netflix, but it gets worse for Disney. Even years into the life of Disney Plus and the millions of signups and the billions of minutes watched, it wasn't making any money. In 2022, Disney's streaming arm suffered a $4 billion loss, and it wasn't just them either. Investors and executives have accepted that streaming is in fact not a good business, at least not compared to what came before, aka cable TV, except for Netflix. Netflix made a $5.6 billion profit the same year as Disney. Netflix already had huge scale and a global reach before most rivals fully entered. By 2019, it was in over 190 countries, which is when Disney Plus first launched, and that's the name of this game: scale. All streaming companies have been chasing this, get as many subscribers as possible, no matter the cost. Hence why Disney launched at just $6.99 a month. But now, Disney and even Netflix are pivoting. And to understand what's really happening, we need to look at how the game has changed, and recently at that. In late 2023, Netflix announced a small yet significant change. If you wanted to share a password with someone outside your house, you had to pay an extra $7.99 a month. This was huge and a total 180 for Netflix. While many users were furious and even predicting the death of Netflix, something interesting happened. The daily signups skyrocketed. In Q1 of 2024, Netflix added 9.3 million subscribers, in big part thanks to the password crackdown. Year-on-year revenue also grew 15% to 9.37 billion, but this signaled something even bigger. Not just chasing more money, but better money. After the decision, Netflix said to shareholders, "In our early days when we had little revenue or profit, membership growth was a strong indicator of our future potential." Now, the director of Netflix said that they want people to move away from fixating on these subscriber numbers. Even though Netflix was making profit already, they knew they had to adjust to keep making more money. And that brings us back to Disney. Disney is trying to do the same as Netflix. Streaming operators will be shifting towards a more balanced approach that includes a focus on driving profitable growth. How does this manifest? Well, let's look at their original shows again. In 2025, after the huge success of Andor Season 2, show creator Tony Gilroy was told by Disney, "Streaming is dead, we don't have the money we had before." Before this, shows essentially had unlimited money. Not so anymore, and that's not all. Disney has lost millions of subscribers in the past couple of years. So is Disney Plus finally dying? Well, not exactly. The truth is even stranger. As they lost subscribers, they began to finally make money. In 2024, Disney Plus finally broke even at about $100 million profit. Then in 2025, it really started to make money. $1.3 billion and $300 million ahead of expectations. What's going on? Disney began to do the same as Netflix, what I'd call strategic churn. The scale game is over. The market is dominated, and I'd even say saturated with streaming services. For these big companies, scaling further isn't worth it anymore. Disney has been laser focused on making profit from the service, and to do so, paradoxically, they have to lose some subscribers. First, they bundled Hulu with Disney Plus in early 2024 to make the package more attractive. But one of the biggest moves actually came prior. Remember Hotstar and the sports streaming rights? They brought in millions of subscribers, but at a heavy cost. So when the rights for cricket went back up for grabs, Disney bid, just not as aggressively as they used to. We made disciplined bids with a focus on long-term value. We chose not to proceed with the digital rights given the price required to secure that package. As a whole, Disney is now being more reserved, hence the comment about streaming being dead. In 2024, Bob Iger said, "As we got into the streaming business in a very, very aggressive way, we tried to tell too many stories. Basically, we invested too much, way ahead of possible returns. It's what led to streaming ending up as a $4 billion loss. It was clear to me that our structure was not working because we were removing accountability from those that were basically investing the most capital. That was a mistake." Disney is being smarter and more fiscally responsible, and that brings us back to subscribers. In November 2025, Disney Plus increased the annual subscription from $79 to $159. That's an absurd increase. But even though many will cancel, Disney will likely make a lot more money overall from those that don't. And now, just like Netflix, Disney is no longer reporting subscriber data. Before, subscribers were everything, and it still is for us. We've been working on crossing 1 million subscribers for the last 8 years, and we're almost there. If you like our videos but haven't subscribed yet, I would really appreciate your help in crossing 1 million. But for streaming, it doesn't matter anymore. Profit does, and it's not just Disney and Netflix, everyone is doing this. In 2024 and 2025 specifically, virtually every streaming platform has begun hiking prices. Even if they lose total numbers, what matters is not total subscribers, it's profit per subscriber. If you invested $10,000 in Disney 10 years ago, you'd have $9,870 today, and that includes dividends. The Disney Plus experiment has seen mixed results, years and years of spending with little to show for it. But now, it seems like it's finally turned a profit. Instead of chasing subscribers with aggressive marketing and aggressive spend on content, we have to start chasing profitability. Maybe now Disney has a more stable path forward, just not with the scale of Netflix, but At least Disney Plus is profitable. Chasing profitability can often backfire too though, as Duolingo is finding out the hard way. Check out this video to learn more, but until then, I'm Hari and I'll see you guys on the next one.